All right, students, we are doing a question on the cash flows. So in the last lecture, I provided you the lecture on the revision of the statement of the cash flows. And now we'll be doing the practice, and this is your past paper of FRC exam. And this is the past paper, March 2023, and we have the question number 3 in your exam. So this is March 2000, and we can see that this is the past paper, which is financial reporting March 2023. So we are doing the question number 3, and the requirement of the question number 3 is, so let's go to the requirement, and it says prepare the statement of the cash flows for MARFAT for the year ended 31st March 2022 in accordance with IS 7 statement of the cash flows, and this is for the 20 marks. Now, you know that we have the cash flows, and I already provided you with the revision lecture of the cash flow, in which I explained 3 activities within the statement of the cash flows. The cash flow from the operating activities, which starts from the profit before tax. And then what we do is we do the adjustments. Adjustments are related to the non-cash things, such as we have the depreciation and amortization and the profit or loss on disposals. And then we need to reverse the items which are recorded on the accrual basis. So we remove the non-cash elements, we remove the elements on the accrual basis, and instead we record the cash paid and cash received with respect of the operating activities. And then we did some working capital adjustments, which is the increase or decrease over here, increase or decrease in the inventory, increase, decrease in the receivables, and these things. So we are doing these things, which is the, yes, that's one. Working capital adjustments. Working capital adjustments. Then we'll get the net cash from the operating activities. The second activity, we have the investing activity, which is related to the buying and selling, the acquisitions and disposal of the assets. So we have this purchase of the property, plant, equipment, proceeds from the sale of the property, plant, equipment, and then other things such as the rentals received from the investment property, receipt of the government grant, dividend received, interest received, all these come within the investing activities. And then we have the other thing, which is the cash flow from the financing activities. Now, cash flow from the financing activities is the issuance of shares and the proceeds proceeds from the loans, the repayments of the loans, the dividends paid, all these things. And then we did the workings. So taxation, tax payable figure, tax payable account is used to calculate the tax paid. Interest payable account is used to calculate the interest paid. Interest receivable account is used to calculate the interest received. Retained earning account is used in order to calculate the dividends paid. Revaluation surplus, if we have transferred any revaluation surplus from revaluation surplus to the retained earnings. Then we have the property, plant, and equipment carrying accounts, carrying values accounts. Then we have the accumulated appreciations, non-current asset disposal accounts, loan notes. We talked about the government grants. So these things are already explained to you in the revision lecture of the cash flow. Now we are just doing the question. So we are starting a question, and let's go to the question. This is the question number 3. So we have MARFAT is the farmer specialized in growing of the cash crops for both local and the international markets. MARFAT's farming activities take place both in and out of the season. Recently, MARFAT approaches bankers for a loan so as to boost its resources. Besides the loan, MARFAT receives grant from the government that assist in acquiring farm machinery. So we can clearly see that these are the things, the loans and the grants. So we know government grant is related to the operating and investing activities, because within the operating activities, we need to reverse the amortization of the grant. And within the investing activities, we need to include the proceeds from the grant. And the loan is relating to the financing activities. MARFAT's bankers have asked the company to submit just the statement of the cash flows for the year ended 31st March 2022. Below are the financial statements of MARFAT for the year ended 31st March 2022 with the comparative statement of financial position. So we know that whenever we have the statement of the cash flows, we will be given with the statement of the profit and loss and the statement of the financial position. So you see, this is the statement of profit or loss. We have revenue, cost of sales, gross profit, then operating expenses with the note number 1, finance cost, profit before tax, income tax, and then we have the profit for the year. So then we have the statement of financial position. Within the statement of, okay, we have the other comprehensive income as well, which is the revaluation surplus. And then we have the statement of financial position, property, plant, and equipment. So we see there is an increase. And then we have the intangible asset. We see there is an increase. Inventory. So, you know, when the property, plant, and equipment is increasing, it's probably due to the revaluation, or they have purchased some of the property, plant, and equipment. Intangible asset is increasing. So probably this is due to the purchase of the intangible asset or the development cost, anything like that. Inventory, it is increasing. That represents the outflow, because when inventory is increasing, this represents the outflow. Trade receivables are increasing. Again, this represents the outflow. Cash, so in the last year, they were having 0. This year, they have the 175. Then this is the total current assets and the total assets. Then we have the equity and liabilities. So we see there is the issuance of shares over here, so which will be included in the financing activities. So there is a share premium balance increasing as well. So that means they have issued the shares, which increase the share capital as well as the share premium. So the previous year, there were no revaluation. This year, they did the revaluation. And retained earnings are increasing, so which is due to the profit for the year. So we need to calculate the dividends paid from the retained earnings accounts. Loan notes are increasing, which increases the loans. And this is the financing activities. Government grants are decreasing. So we need to see whether they have received the new grants or they have to repay it. So in the additional information, we see that deferred taxation. We know we'll take these figures in the tax payable accounts. Trade payables, they are increasing. So this represents the inflow. Bank overdraft. So initially, in the previous year, there was no cash and there was the overdraft. And this year they have the cash but no overdraft. So we know when we are closing the statement of the cash flows, we need these closing balances. Then we have the interest payable accounts, which is used to calculate the interest paid, current tax payable, which is used to calculate the tax paid. Then we have the total current liabilities and the total equity and liabilities. So depreciation of the property, plant, and equipment, which we need to use in the operating activities, is K800, taking the figure in the 000. And the loss on disposal of the property, plant, and equipment amounting to 125,000 are included in the cost of sales. So loss. So we have the depreciation and the loss of the disposal of the asset. Okay. Intangible asset represents the deferred development expenditure. Okay. As we said, that it is probably the development expenditure or the purchase of any other intangible. During the year end, MARFAT successfully completed the development of a breeding chemical, capitalizing further 125 before amortization. So we need to get rid of the amortization as well from the development account, just like we do it for the property, plant, and equipment. ZICA revalued upwards by K500. K150 has been transferred from the revaluation surplus to the retained earning, as I said to you that we usually do that. So you see, we have this retained earning accounts, and this is transfer from the revaluation surplus to the retained earnings. Okay, so we have as a year-end adjustment. So we have this. Okay, then moving to the fourth adjustment. Furthermore, a new plant was acquired at a cost of 6,25,000. Government grant of 125 was received in respect of this purchase. MARFAT diversified its sources of finance by issuing the shares. We have already seen that. MARFAT pays dividend to the share, which we need to calculate from the retained earning accounts. So you see, this is the question. So we know that we need to start it. We need to start it from the profit before tax. We need to start it from the profit before tax. So the profit before tax figure is 2175. So the statement of the cash flows, we know that it starts from the profit before tax, which is 2175. So you know that taking the figures in the 000. So you just take 000 in common. Now we need to see the investment income. So we didn't see any investment income within the question because otherwise it would have been mentioned within the statement of profit and loss. So there is no investment income. Then we have the other thing, which is the interest expense. So we have not seen any investment income within the question, but yes, we do have the interest expense. So interest expense, how much it is? Interest expense is clearly mentioned, which is the finance cost, is 75. So what we do is interest expense, we need to add it back because interest expense is deducted and it is on the accrual basis. We need the interest paid, which is the actual interest. Okay, now we have the depreciation. So depreciation is mentioned within the question. Depreciation, it is mentioned within the question. The depreciation is how much? The depreciation of the property, plant, and equipment is K800. So what we do is we take 800, but we need the amortization as well. For amortization, we need to do the workings. So how we can do that? So if you see within the property, within the intangible asset, we have this intangible asset account. So the opening balance of the intangible asset is 750. The closing balance of the intangible asset is 1625. And then it says within the question that ZICA successfully completed the development of a working capital capitalizing 1.25 million, which is before amortization charge for the period. So that means the additions. So you see the question is quite easy. So which is 1.25 means 1250. So that means the amortization will be calculated as a balancing figure. So 750 plus 1250 minus closing balance is 1625. So it is 375. So 375 is the balancing figure, which is the amortization charge. Now this amortization we take over here, 800, sorry, plus 375, which is the amortization. Okay, then we have the profit or loss on the disposal of the non-current asset, and it clearly says in the question that we have a loss. So it says the loss on the disposal of the property, plant, equipment is K125. So what we do is simply we add back the loss. So if you just know the concept of the cash flow, you remember the format, you just need to plot the figures into the question and that's it. So we are done with the profit before tax, finance cost, depreciation, amortization, and we are done with the loss on the disposal. Then we don't have any investment property within the question, so we just skip it. Then we have the amortization of the government grant. Now we know that I told you that amortization is calculated from the government grant account. So you see this is the government grant. This is the government grant account. The government grant. And you go to the figures. Okay, so let's go to the figures. So we have the government grants over here. The government grant opening balance is 750, which is a liability. So we put that opening balance over here, 750. And then we have the closing balance, which is 650. So we put the closing balance over here, which is 650. So just taking the balances from the financial statements. 750, and then we have this 650. So we have put that thing over here. And there was a note related to the government grant. Let's go see that. What was that? Well, there was a note related to the government grant. Yes. Furthermore, new plant was acquired during the year at a cost of 6,25,000 and government grant of 125,000 was received in respect of this plant. So receipt of grant is 125. So 750 was the opening balance, 125 is mentioned in the question that we have received, and then we have this 650. So what we do is 750 plus 125 and minus 650. So the amortization of the government grant is 225, which will be calculated as a balancing figure. So what we do is we go back to the question. We go back to the question, and what we do is we write this 225 over here, which is the amortization of the government grant. Once we are done with this, then we have the working capital adjustment. So working capital adjustment is the increase or decrease in the inventory. Okay, let's do that. So inventory is increasing, which represents, as I said, the outflow, which is 3550 minus 2350. So 3550 minus 2350. So this represents the outflow of 1200. Okay, then we have the other one. Then we have the other one. Okay, which is the receivables. Receivable is 2475, which is also increasing, which represents the outflow. And this is 775. And then we have the payables. So payables is the inflow, because when the payable is increasing, this represents inflow. 2188 minus 1825. So this is 363, which represents the inflow. Now we can go to the question and write these figures. So inventory is 1200 outflow. Okay, then we have the receivables 775 outflow. Okay, then we have the payables, which is 363 inflow. There are no provision in the question, so we get the cash generated from operations. Again, using the calculator. So we have 2175 plus 75 plus 800 plus 375 plus 125 plus 225, right? Amortization, we need to deduct it. So we just need to minus 225, because amortization is recorded as income. We recorded the amortization of grant as income. We need to reverse it. So it will be 225 minus. 225 minus. Okay, then we deduct minus 1200 minus 775 plus 363. So it is 1713, which is the cash generated from operations. Now we need to calculate the tax paid and the interest. So now we need to calculate the tax paid and the interest paid. So let's go to the tax paid and the interest paid. So tax paid and interest paid working is simple. We need to take the opening balance of the current tax plus deferred tax. Opening balance of the current tax plus deferred tax. So you go to the question and see. The deferred tax is 350. The current tax is 400, which means the opening balance is 750. Opening balance is 750. In the second year, the deferred tax is 775 and current tax is 325. So 775 plus 325, it is 1100. So the closing balance is 1100. The tax paid closing balance is 1100. Then we need to take the profit or loss figure. So profit or loss figure, what is that? Profit or loss tax figure, which is 675. So which is 675. Now the tax paid will be calculated as a balancing figure. So how we do that is 750 plus 675 minus 1100 is 325. This is the tax paid that we will take to the operating activities. Now, before going to that, we need to calculate the interest payable as well. So in the interest payable, let's go to the statement of financial position. We have this thing, accrued finance costs. So the opening balance is 12, closing balance is 37. Opening balance is 12, closing balance is 37. And the finance cost in the statement of the profit or loss is 75. Finance cost, which is charged from the statement of the profit and loss, is 75. So which is 75 plus 12 minus 37. So you get 50. Interest paid is 50. So interest paid is 50 and tax paid is 325. So going back to the question, yes, interest paid is 50. Tax paid is 325. Now we get the cash, net cash, which if it is a positive figure, which is net cash inflow from operating activities. So which is 1713 minus 50 minus 325. So which is 1338. So net cash inflow from the operating activities is 1338. Now we need to calculate the investing activities, in which the first figure is the purchase of the property, plant, and the equipment. Purchase of the property, plant, and equipment. Now we already know the T account of it. Purchase of the property, plant, and equipment. We have the carrying value T account, and let's go to the question and see what is the opening balance of the property, plant, and equipment. The opening balance is 4575. So we just put the opening balance 4575. And then we need to put the closing balance, which is 4725. 4725. So 4575 and 4725. Now we have the disposal. We need to write the disposal and we need to write the depreciation. Okay, so in this question, we already know how much of the property, plant, and equipment we have purchased, because it clearly says in the next page, new plant was acquired for 625,000. So this 625,000 is already given. So if this 625,000 is given, what we are supposed to calculate from this account? We are supposed to calculate the carrying value of the asset disposed. Because you see in the question, they provided us the depreciation of the property, plant, equipment, the property, plant, equipment purchased, and the loss on the disposal. So in the loss on the disposal, we also need to have the proceeds, which we need to mention within the investing activities. So what we need to do is, from the property, plant, equipment, we will calculate the carrying value of the asset disposed. So the opening balance is 4575, closing balance is 4725. Additions are 625. Depreciation is given in the question, which is 800. So we put that. So now we are done. 1, 2, 3, 4, 4 figures. And there's a revaluation as well. Yes. And the revaluation, it said ZICA revalues upwards its firm building by K500. So which will go in the property, plant, and equipment, which is revaluation of 500. Now we can calculate it. So it's 4575 plus 500 plus 625 minus 800 minus 4725. So 175 is the carrying value of the asset being disposed. Now you see at what amount we disposed it. 125. This is a loss, sorry. This is a loss. We know when we take the proceeds and deduct the carrying amount, we get the profit / loss. If the figure is the negative, then it represents the loss. If the figure is positive, then it represents the profit. So you see the loss is 125. The carrying amount is 175. So that simply means how much would be the proceeds. So the carrying amount is 175. The loss is 125. So that means we dispose it for 50. Because when the carrying amount is deducted, you get the loss, which is a negative figure. So if the carrying amount is 175, which you have calculated from here, and loss which is given in the question of 125, then you have disposed this asset for 50. Now what we can do is we can go to the investing activities. In the investing activities, we will write what? We will write the purchase of the property, plant, equipment, which is given in the question of 625. We have the acquisition of the intangible asset, which is the development expenditure. And it was mentioned is 1.25, which is 1250. Everything is mentioned. Okay, then we have this thing. Okay, let's just write these things in the other column. So that we have 625. Intangible asset is 1250. Proceeds from the sale of the property, plant, and equipment is 50. Grant received was how much? It was 125. The grant was 125. There is no interest received. There is no dividend in the question. Now we can have this, which is the net cash from the investing activities. So we have 125 plus 50 minus 1250 minus 625. So it is 1700. So negative, 1700 negative. This is the net cash outflow from investing activities. Now we'll talk about the proceeds from the issuance of the shares. So for the proceeds from the issuance of shares, we have the share issuance account. We just go to the share issuance account. We take the opening balance of the share capital and the share premium. So let's go to the statement of financial position and see we have the opening balances, which is 1250 plus 250. So 1250 plus 250. 1250 plus 250, which gives you 1450. No, it gives you 1500. The closing balances are 1875 plus 875. So it's 1875 plus 875. It gives you 2750. So the closing balance is 2750. Now the difference between these is the cash from the issuance of the shares. So 2750 minus 1500. So it is 1250, which is the cash from the issuance of the shares. So we take that figure into the financing activities, which is proceeds from the issuance of shares, which is 1250. 1250. Again, we need to take that thing in the other account over here. 1250, other column. Okay, then we have the loans. So you see, the loans are increasing. It was 250 and now it is 750. So that means we have received the loan of 500. 750 minus 250, so which is 500. There are no leases in the question. Now we need to calculate the dividends paid. For dividends paid, we have the working of the retained earnings. Yes, over here. So for the dividend paid, we have the retained earning figure. Okay, so let's go to the retained earnings. Retained earnings. Retained earning. Opening balance is 4,000. So we write this 4,000. Closing balance is 4725. So we write 4725. Then we have the profit for the year. Profit for the year is in the statement of the profit and loss, which is 1500. We write it over here. And then transfer from the revaluation surplus. It was mentioned in the question. How much balance is transferred? It says 150 is the balance transferred. So 150, we write it over here. Now we can calculate simply. So it's 4,000 plus 1500 plus 150 minus 4725. So it is 925. 925 is the dividend paid, which we deduct from financing activities. So dividends paid 925. Okay, now these are the three things we have within the financing activities. So what would be the net? The net would be 1250 plus 500 minus 925. So it is a positive figure which of 825. Now we need to take the net of these three activities. So it is 825 minus 1700 plus 1338. So which you have the positive movement, which is the net increase in cash and cash equivalent of 463. Now we need to adjust the opening balance of the cash and cash equivalents. So you see the opening balance is 0 minus the overdraft. So the cash element is 0. We deduct the overdraft from it, which is 288. So that means we have the negative balance of 288. So 463 minus 288. It should be 175. If it matches the cash balance in the statement of financial position, then your statement of cash flows is right. Otherwise, you have done the mistake. So let's go and you see the cash position is 175. So congratulations, you have correctly made your statement of the cash flows.